Eric, good to speak with you again. Let me start off by saying, great conversation with you and Vince. And ironically, I put this on my X post and reshared Vince's conversation with you on Substack with a note saying, I'm talking to Eric this morning and Vince a couple hours later on two individual conversations. So great, great week for me. I get to hear you two chat with each other, and then I get to speak to both of you individually. So thanks.
Well, thank you for inviting me on the show again, Michael. Really appreciate it.
We spoke wasn't that long ago, and it feels like we're in a different world now, and especially in relation to what you do. And I saw the videos. I don't know where it was in Australia. Did you see that last night? Like people standing in line for gold.
Yeah, I saw that. And it's happening in Vietnam too. Like, I mean, it's just pandemonium. People lining up to buy gold. And I tell you, Michael, it's not FOMO. It's not the fear of missing out. Like me and Vince talked about that yesterday. It's pure fear. I'm telling you. People are fearful. Like all the comments that I'm getting regarding the videos and the people who are going out to buy the gold and silver, they're just really afraid of what is going to come next because of what is happening around the world today.
What do you think that they are fearful of? This episode is brought to you by Vaulted, launched by McIlvaney Financial Group, the simplest and most affordable way to own physical gold and silver. Physical gold is the only asset outside of the control of the government and banking system. They can print dollars, but they can't print gold. Click on the promo link in the show notes or go to vaulted.blbvux.net/coffeeandamike.
Well, first of all, look at just, on the international trade side, look at what is Donald Trump doing. Yes, we know that he has been pressing China since his first term, but he came out this week and said that, we're escalating this thing to a trade war. And then last week, he said that he wanted to throw another 100% of tariffs on China. So after, he said all that and did all that, the Chinese stock market actually tumbled quite a bit. I own some Chinese stocks, so I know it went up quite a bit in the last year. Some of my stocks went up almost 100%, but then just in the matter of a week, 1 week, because of what Donald Trump said, the stuff tumbled 20 to 30%. So there's a lot of fear in the market just on the economic side. They don't know what Donald Trump is going to do. And and then you have the situation in Venezuela. You have the U.S. fleet right, outside, like I guess international waters. I hope outside of Venezuela, um, getting ready to potentially march in. And the Russia situation is also fairly volatile. And on top of that, you have what's happening in the Middle East, which is always pretty bad. It just gets from pretty bad to worse. It bounces back from worse to pretty bad and then to really bad, right? So all this happening around the world, plus what Donald Trump is doing to China, and not only China, Donald Trump also snubbed India, you know, with the new H-1B arrangement, with the tariffs that Donald Trump is saying that is going to throw on India. I think everything contributes to the kind of fear that we're seeing, with people. And people are just going, on Vince's show, I said this primal fear. It, Human beings, when they have that primal fear that hits them, they automatically go back to the thing that they feel the most comfortable with, that they feel that is the most reliable. that they can see, touch, and feel. And that's gold and silver, in my opinion.
Yeah, in regards to China, because it's it's so I find so fascinating how people, you've got the MAGA side that is, they're all, uh, Trump's playing 5D chess and, uh, have faith in the government. You weren't supposed to trust the government the last 4 years, but now you're supposed to have complete trust in them, which I find very ironic. But but China, I mean, the earth minerals that are needed by the United States to manufacture weapons or produce weapons to fire at these other countries, they need from China.
Yeah, you're right, Michael. And China is taking the appropriate steps to stop exporting these rare earths to the US, not to civilian companies, okay? China already made a statement said that if the US companies need the rare earths for civilian usage, they will look at it at a, case by case basis. But basically they're stopping all rare earths being exported to US defense contractors. Or, I don't even know what you guys call it now because the DoD's name is changed, right? It's
The,
the Department of War
the
at this
part,
point.
right, right.
So they're war contractors. They're no longer defense contractors, if we go by that. But anyway, so yeah, so China is stopping these rare earths, which are critical minerals, by the way, to be exported to the US. And interestingly enough, around the same time, Donald Trump and his administration put a whole bunch of minerals on the critical U.S. critical mineral list, and that includes silver, which for the longest time, I don't know if I mentioned it on the show last time. To me, it doesn't make any sense that the U.S. and the Western banking cartel worked in collusion with China. Well, it makes sense in the past because China was the world, factory for the West, right? But ever since China stopped recycling US dollar surplus into US treasuries, it didn't make any sense for those, 5, 6 years or whatever, for these banksters to work with China to suppress the price of physical silver because we're seeing the effects of it right now at the LBMA. Essentially, you have the Western banking cartel. They are trading these paper, metals contracts, which are not backed by physical, and that in effect suppresses the price of gold and silver. And then China and India go to the LBMA and buy the cheap gold and silver, and also COMEX as well, but more so at the LBMA. So is that even at the national interest of the United States to provide cheap physical, tangible precious metals and also a critical mineral, which is silver, to China at a artificially cheap price? To me, it doesn't make any sense at this point.
What do you think their thought process is with it then?
I think it's just a matter of like Michael, these bankers, right? I think the system has been in place since 1974. And I think like in the case of the LBMA, it's 1987. But they have just been operating in this manner for so long, it's difficult for them to get off that crack cocaine, okay, of the metal swaps, which is essentially what they're doing. They're doing the same thing, Michael, at the LBMA as the guys in that movie Margin Call, okay, if you remember, with Kevin Spacey, um, when they were trading those CDS, the credit default swaps, okay? They're doing the same thing right now at the LBMA. They're trading these leverage long positions and leverage short positions of paper metal back and forth, and they're making margin in between of that, and then they're leasing When they do need the physical metals, they're leasing the physical metals from each other. So, you know, you saw that show that I did with Vince. The reason why it's blowing up now is because their actual physical metal free float went to zero last week. That's why it's blowing up. Like they have no collateral, essentially. The collateral is the physical silver.
And I heard you say to Vince, and I forgot his name. He actually lives where I live. Fair, right? John, is it John Fair? Five
Yeah,
hundred. Josh Fair. Josh
Josh Fair.
Fair.
Yeah. Josh Fair. Yeah.
You need the equivalent of 500 planes full of silver to fly to London to meet the demand. Did I hear that correctly?
Yeah, you're absolutely correct, Michael. And Josh Fair, he's legit because he's the CEO of Scottsdale Mint, and he has actually, maybe not the entire airplane. I don't know, right? But he definitely know the freight, cost and the physical um dimensions of these silver bars and how many silver bars he can fit in to each plane because he's in the actual physical bullion business.
So explaining this to me like I'm 5 years old here, Eric. This sounds to me like a robbing Peter to pay Paul type of scenario where you're scrambling back and forth with paper, but there's not enough physical to meet the what's on paper. Am I understanding that correctly?
Yeah, you're correct. Normally, if they have like let's say a like some kind of a free float, meaning that they have like a backstop at the LBMA in their vaults, then they can trade like they think they can just trade paper contracts 400 to 1, like 400 contracts to one physical. That's what they did for the longest time because they thought, who cares? We're trading 400 to 1, but those 400 contracts, they're never going to come and stand for delivery. And even if they do, we have enough metals backstop at our vaults to satisfy that. So obviously, I was telling Vince something happened in the last 2 weeks because 2 weeks ago, Robert Gottlieb and Daniel Gatti from TD, they said that there's at least around 5,000 metric tons of physical silver at the LBMA as free float, okay? Like meaning silver they actually can access and ship to clients if clients stand for delivery. Now, those 5,000, just to give you context, they said that the 5 to 7,000 will last the LBMA around at least 5 to 7 months. So they would say, you know, um, be cautious because it's draining, but it's going to last 5 to 7 months. Now, the thing that is shocking, like I said on Vince's show, is that 2 weeks after, which was like last week, all of a sudden, Rob came out and said the LBMA is down to zero free float. So what I'm saying is that something happened in the last 2 weeks. Somebody probably went to the LBMA and stood for some massive physical silver deliveries. The only problem with that is that we don't know about it because all these LBMA contracts are bilateral, meaning that they are private between the buyer and the seller.
And for people that don't know, LBMA, London Bullion Market, is what that stands for.
Correct. Yes.
Now, so somebody or some people had to have known them taking the physical ownership of the physical would rattle the markets like this. No.
Well, you got a good point because I mean, all this coincided with Donald Trump threatening China with another 100% tariffs, and Donald Trump threatening India with a whole bunch of tariffs. So is it a coincidence, or was it India and China proxies with the instructions from the Chinese government and the Indian government going to, they went to the LBMA and basically just told the LBMA banks, that bullion banks, that they want to take possession of the physical metals on their long contracts, right? So they probably have some Long just means that they want, they are buying the physical metal, whereas short just simply means that you're selling the physical metals or the paper, right? In the case of LBMA, like I explained, a lot of it is just paper. But in this case, what happened is probably some Chinese and Indian proxy went to the LBMA and said, guys, normally we'll just settle by on just paper, right? Everybody's happy. We just hedging or whatever, making a small arbitrage. But today we're not doing that. We buy only. We want to stand for delivery for 5,000 metric tons. So that's probably what happened because I don't see the bullion banks at the LBMA inflicting this on themselves. That doesn't make any sense to me.
Imagine having that much power that you could, who knows how many transactions were done, but you could shift or impact this much on a global level.
You know, if you China and Russia and India and the BRICS Plus, and you push to the point where you have no choice, it becomes a necessity to do this. And I think that's what happened. So I really think, Michael, we've crossed, a line, basically. I think we have crossed the line of no return with these BRICS Plus countries. I mean, I think, and I don't know if I mentioned this on your show before, I think they're about to start using physical gold and potentially silver as collateral, not only for their offshore interbanking system, but also for liquidity, but also for the international trade. So that's the direction I think they're going towards. Simply because the United States and U.S. Treasury bonds, notes, and bills are no longer trustworthy to these countries. They need something else in place of that. And the physical gold and silver are something that is not man-made. It's not, some sort of sovereign paper that is issued by some government, and it is finite and it is variable. They are variable, right? Gold and silver. So that's something I think they have decided um, on using as their collateral in place of U.S. Treasury um, bills, bonds, and notes.
I want to shift over to gold here in a second, but where do you see then this the price of silver and overall the situation in relation to silver going in the short term in the next? I had David Morgan on yesterday, and he seemed to think that this will get worked out within the next 2 weeks or so, give or take. That the LBMA will be able to produce the amount of physical silver that is needed. Um, what do you think?
So let's look at some numbers, right? Like the LBMA, according to Robert Gallup, they need 150 million additional troy ounces of silver to normalize the situation, to make everything normal like before. 150 million troy ounces. The COMEX registered vault as of today, I'm looking at the new number today. This is like registered just means stuff that is they have like silver that's a warrant issued to it that can be withdrawn by authorized participants if they need to withdraw the silver. So registered vault has 172 million troy ounces as of today. So the LBMA needs 150, and the COMEX registered vault, the entire thing, only has 172. So you're really looking at, for the LBMA to normalize, it needs to almost import 80%, 88% actually. Yesterday I calculated it, around 88%. The silver that is at the COMEX registered vault. Now, somebody today told me, hey, what about China? Is the LBMA theoretically can get stuff from China too, right? China has the SGE, which is the Shanghai Gold Exchange, and it has physical silver. Let's look at China. So China right now has 35 million troy ounces of physical silver. And I bet you, Michael, China is not going to, if China only has 35 million at its SGE vault, China is not going to ship all 35 million to the LBMA. Unlikely. Okay. So if we, just take those numbers and crunch it, I think within 2 weeks it's likely, and this is a far stretch, okay? Because you said yourself, right? George Fair said that it's going to take 500 airplanes to ship all this to the LBMA. In 2 weeks, we might maybe 100 million ounces in 2 weeks. It's possible if they work around the clock. But the question is, how much of this physical silver is spoken for already at the LBMA, at the SGE? So is that 100 million, that number of ounces, troy ounces of silver, is that even a realistic target for the LBMA to get from these two places?
And what will it cost them in order to import this stuff in? They're going to be paying well over premium for this.
Well, um, Michael, they managed to smash the futures price at the COMEX. So there's actually a price arbitrage. Like it might not cost them more than the spot price that they're selling the silver at the LBMA. So financially, if they manage to do it, they might not lose money on that front. Okay? But then my question is, again, are they going to get 100 million troy ounces in 2 weeks to normalize the situation? I don't know. I don't have a magic, like, like a crystal ball. I can't see the future. But then, it's possible, Michael, that they put a band-aid on a gaping wound in 2 weeks, and everything looks normal, maybe, for a bit of time, and then the next implosion, I don't know how long it's going to take, maybe 2, 3 months, 6 months. Maybe the next one is the one that they just simply cannot patch back together. So that's my opinion. My answer is that I don't know if they're able to, put Humpty Dumpty back together again in 2 weeks. But my guess is that if they manage to do it this time, the next time will be a lot worse. You got to remember this, Michael. I'm just gonna put this out there so that your audience um, get some context of what I'm talking about. With like every single time the stock market implodes or like have a huge correction in the US, what happens? The US government prints a lot of money, injects the new liquidity into the system, and then everything goes back up again. That's basically the playbook since the great financial crisis, essentially. Since 2010, once Congress passed the laws allowing them to do QE and do the liquidity injections. But what I'm trying to get at is that they can do that with fiat US dollars. They can always pump liquidity into a depressed fiat currency um, underlying market, like the US stock market. But if your liquidity, in this case, is physical metals. You can't just magically make physical metals out of thin air. That's why I'm saying that even if they manage to patch it this time and manage to fix it, make it work temporarily, next time the crisis may even be bigger, and there might be no going back next time if something similar happens again.
Every time I think about the great financial crisis and how they pumped in so much, dollars into liquidity, I think it's the old school arcade game Dig Dug, wasn't it? Where they blow up the bad guys, putting air into them. Like,
Yes. Yes.
and that's exactly what they did, right? They pumped up all these financial institutions, the automakers, etc., to keep them afloat. But in this case, if they can't put it back together this time or perhaps the next, what does that mean in your eyes?
Somebody somebody told me today that means real price discovery for gold and silver. And that may be, where we're heading to eventually. I mean, it's far-fetched because we're so used to the paper games that they play. But what if all trust is lost with the paper gold and silver at some point? Then, we might get back to a physical gold and silver dominant market, just like what the SGD has, which is they have something like 100% delivery rate and 70% withdrawal rate. So that's like basically a physical market. It's one-to-one backed. And Michael, that's maybe where we're heading eventually.
But true discovery, they don't want discovery on anything, though, Eric. Right? I mean that.
Yes.
So if there was true discovery, that means the prices of precious metals be much higher or lower?
Um, I mean, if there's true discovery, I think the prices will be a lot higher simply because of the way that we are, treading towards remonetization of physical gold by the Global South and the BRICS Plus. And for silver, you know, it has just been suppressed so badly, Michael. It's the only metal, it was the only metal 2 weeks ago that was still below its 1980 high. Now we're above it by like a buck or two, right? But for the last 40 years, silver has been the most depressed commodity that you can find. So if there's true the price discovery, I do see both metals going higher in terms of their US dollar price.
What do you say to people that I'm sure that many have reached out to you since all this started in regards to silver? Should I buy now? Should I sell? What should I do, Eric?
I think what people are doing, they're buying if they don't have silver and they're fearful, they might have started to buy some silver. I see that. My recommendation to people is always, buy with the money that you can spare. And if you are not sure, spread it out and buy it in a dollar cost average, manner.
Yeah, people have asked me, and I'm lucky I get to talk to people like yourself and Vince and others. But one thing I will say is the money sitting in your checking account right now or your savings account, if you have extra, it's doing you no good because the devaluation of the dollar it will continue.
I agree, Michael. Is the if they don't change something, the debt that the U.S. government has, they're never going to repay it back. It's I think they're heading to $38 trillion right now. It's going to be there soon, if not already. This, Michael, I'm looking at the US debt clock right now in real time. It's 37.9, it's 37.877 trillion dollars. So it's going to be $38 trillion, possibly even, before the end of our conversation today. Isn't that scary?
Where do you see the price of silver then going in the short term? I mean, right before we got on, I think I saw it at, was it 51 or $52 an ounce?
The spot price is at 52 right now. The futures price is at around, it's below 51, the futures price, depending on the month contract that you're looking at.
I wonder though too, in regards to silver, and then we'll move on to gold here in a second. But when the masses, if more of just regular people that have no idea start buying it, will that drive it up even more?
It's possible, Michael, but what if there's nothing for you to buy? What if they just simply do not have it? What will happen? Two things will happen. Because silver is a very interesting market, the way that they have segmented it, right? You have the retail market, which has its own supply and demand dynamics. And then you have the industrials, people who use silver to make solar panels, the guys who make weapons, like you said, EV, electrical vehicles, sorry, electric vehicles. And then you have, the guys who make the semiconductors, they use silver. The guys who make the servers, server farms, or AI. So silver is a lot of uses. And the retail crowd, like I said, they have their own supply and demand dynamics. But the people, in my opinion, that determine the price of silver are the industrials, the people I just mentioned, the industrial users of silver and the sovereign countries, because they are the people who directly trade at the COMEX and the LBMA via the proxies, right? Whatever bullion bank that they use, etc. So, when you are buying those 1,000 ounce COMEX silver bars or like 1,000 ounce LBMA silver bars, you're directly affecting the prices of COMEX futures and LBMA spot prices for silver. So is that you think that like what I just said makes sense to your audience? It's two separate, basically two separate markets. That's my point. Not necessarily, that retail can directly affect the prices of the LBMA and the COMEX in an immediate manner. Okay, that's it.
Well, as you're watching this unfold, because what's happening in silver, and are you just like, it's unbelievable that you're talking about this now, where we're at with it?
Well, I mean, I know a lot of people say it's unbelievable, Michael. And that's part of the fear, right? Like a lot of I have a Red Note account in China. So I have it's the same handle as at King Kong 9888. So I have one on X and one on Red Note. And the people come to me via direct messages, and they say it's so unbelievable and that they're fearful. They don't know, like I said at the beginning of your program, they just don't know what's going to happen. Like just in the gut, they feel that something is wrong. When silver went from 25 bucks US dollars per troy ounce to 50, and now we crossed 50, they feel that something is wrong with the world.
Now the gold market. Uh, Last time I looked, 4,200, I think, right? 40, right, 42, $4,300 an ounce. Uh,
Yes.
um, how do you feel about gold? Do you feel differently about what's happening in the gold market versus the silver?
You know, I feel that I feel that the gold market is moving um, because of like I said in your program, all these BRICS nations are buying physical gold. They're going to remonetize gold as a financial system collateral that they can use for liquidity for their internet for their commerce. Okay, just between the BRICS countries, and I'm sure that they want to do it internationally as well to non-BRICS countries, and for trade. So having said that, again, Michael, I think 4,200 bucks is not excessively high for that purpose because that's a humongous use case, new use case for physical gold. Now, short term wise, there might be huge corrections. We're in the middle of run right now. I mean, not huge, but I guess I don't know if it's huge. It dropped 100 bucks in the last 24 hours from the peak. So is that big? Is that is that huge? I don't know, but in the meantime, right now, before the BRICS Plus countries establishes the new system, the US dollar gold price is heavily affected by the conditions of US dollar liquidity in the international system, financial system. So if there's a slight US dollar liquidity contraction, like I believe what we see now, it might not be full flash right now. It's starting out as we speak, then the prices of gold, silver, and miners will all be affected, regardless, because the entire world right now is still on the US dollar system, US dollar, US Treasury, bond, notes, and bills system.
Also, though, don't you think it makes sense to not only if you have gold already, but to acquire more of it because it's in these governments' interest across the world to for the value of gold to go up.
I think, yeah, Michael. I mean, like I said, I own a lot of gold already. I bought it all, pretty much all of it, below $1,440. Okay, on average. Okay, but if I do not own any gold right now, I would start buying some gold. Like I said, dollar cost average it. If you don't feel comfortable, if you feel more comfortable, you have some money set aside, and you feel that, and you believe that physical gold is going to be a critical component of the future financial system, like I said, then it does make sense for that particular person to buy a bigger starting position of physical gold right now.
This is where I'm having a hard time grasping what it seems to me that they're doing here in the United States. Devaluing the dollar and almost like I don't know if rigging is the right word, but to increase the value of gold, prop it up as best that they can, to inflate the debt away. Am I wrong by saying that, Eric?
You know, I don't think the US itself is aggressively doing that to prop up the price of gold. It's a if you can call this, it's almost like a global effort to do it. Simply because the U.S. government and also all these governments around the world, they're all printing so much money, fiat currency, right? So gold is simply a mirror for the financial systems. It shows you and I and everybody, Michael, how ugly the fiat currency financial system really is. So if you look at it from this perspective, it's not the price of physical gold going up, it's the value of the fiat currency that is in your hand going down.
And that's why it makes sense for people, if they have the ability, to move some of that money into metals or some type of hard assets, I would think.
Absolutely. I would, like I said, I would if I don't do not own any already, I would start right away.
How high could gold go in your view?
I think if it I think the first stop, just assuming that we don't have huge corrections because of US dollar liquidity conditions. I think Jamie Dimon told us. I don't know if you follow the news, Michael, but Jamie Dimon came out this week and said gold can get to 5 to 10,000 US dollars per troy ounce. So I think potentially gold for a first step can get to 5,000 and maybe within 2 or 3 years, or maybe even quicker, right? I don't know. It can get to $10,000. And that's when, like you said, the US government, the US Treasury Department can step in and revalue the 8,133 metric tons of physical gold that they hold to market to $10,000. And that will, by the way, Michael, that will give them $2.6 trillion free and clear from the Federal Reserve. All they need to do at that point, issue a whole bunch of gold certificates, just paper, to the Federal Reserve that represents the gold that they hold, the 8,133 metric tons, and then the Fed will magically create $2.6 trillion and hand it to the US Treasury Department. So 2.6 trillion dollars and the $10,000 per troy ounce gold is significant, Michael, because the amount of long duration US debt, we're talking about US Treasury bonds that are 10 years or above in duration that foreigners own right now is approximately $2.1 trillion dollars. So if the US manages to get $2.6 trillion dollars from gold revaluation at $10,000 US dollars per troy ounce, then they can substantially not only reduce the long duration holdings of these foreigners, but they can also take that money and do other things within the US economy and US government.
What would the world look like, Eric, at $10,000 an ounce?
Michael, I don't think it would look a hell of a lot different than what it is right now. You know why I say that? Because at 1,600 US dollars per troy ounce of gold, somebody came to me and said, Eric, if gold ever gets to 4,000 US dollars per troy ounce, a loaf of bread is going to be $100 in the US. So I went ahead and checked how much a loaf of bread costs at Costco right now. It's like a good one, not the crappy ones, okay? It's around 350, the really good ones for a loaf. It's not 100. So I think if we get to $10,000, not I don't think much will change. But if we ever get to, let's say, 100 or $200,000 per troy ounce, then the world might be a very different place at that point.
Yeah, it's always when you think that the sky is falling and we're about to go off the cliff. you somehow it gets stitched together, and we just the world keeps limping along.
Michael, um, I just tell people, my followers, that they have the responsibility to protect themselves and their families financially, and also spiritually and physically, etc. Right? But financial wise, buy like you said, buying physical gold and silver is not a bad way um, to essentially you're buying financial insurance for whatever happens in the future.
It, so what do you see by the end of Trump's term? What will our global system look like to you?
I think by the end of Trump's term, which is if you can correct me if I'm wrong, like 4 years away, am I correct?
Three, almost a
Three?
little
Okay.
over three at this point. Or yeah,
Little over three? Yeah, okay. So 3 years away from today, potentially we might be looking at a parallel system that is put in place by the BRICS countries that runs alongside with US dollars, US Treasury bonds, US Treasury bills, and US Treasury notes. Um, if that happens, I think the US may, under the leadership of Donald Trump, maybe is probably the beginning of the end for them to start reshoring some manufacturing within the US. So, the story is just starting out, Michael. And I'm a I'm an optimist. So I look at the glass half full instead of half empty. I think Americans are hardworking people. Your countrymen are smart people. So I'm hopeful that, for the global community, that will get through this without ending up having, you know, a, a global war, God forbid, because of the decoupling that is going on.
but there's so many scenarios going on right now in terms of conflict where you look at, you said earlier, the Middle East, Russia, Ukraine, Venezuela, and also from within, right, within the United States, both in Chicago, Portland, LA. There's a No Kings Protest 2.0 scheduled for tomorrow. And so there's a lot of, and also I think, with the federal government still shut down, you're seeing, and you will see, depending on how much longer that goes on for, a lot more tension, and the temperature just continue to slowly turn up.
Well, um, like I said, Michael, I don't have a crystal ball, but I do see the potential the potential breakdowns of what the world is right now, the potential points of breakdown that can happen. And that's why, for my personal self and my family, I own a lot of gold and silver. That's really the underlying reason why I got into the precious metals space in the first place. Is to is for insurance. It's for protecting the financial welfare of my family.
What does the future of the crypto world look like to you by the end of the Trump administration?
It's an interesting question. I think eventually, I think a lot of the big tech companies in the US are going to incorporate US Treasury, notes, bonds, and bills backed stable coins in their ecosystem. So I don't know if you read the Genius Act. Have you? Like that's the cryptocurrency Genius Act that the Trump government put out. So
Top,
basically, what they want is, Sorry?
Oh,
Yeah.
no, I was gonna say, tied to the Mar-a-Lago Accord that Stephen Moran had put out. Not that it's tied to it, but that was Stephen Moran had put that out last year. Who is now ironically on sitting in the Fed. So I didn't mean to cut you off, but
Correct. Correct. So, okay. So I was just gonna say that's basically just their efforts at like, opening up new use cases, US Treasuries. So they want everybody to basically be buying US Treasuries via these stablecoins. Because if you're using, let's say I'm a guy in Hong Kong, right? I'm not an American citizen. I like Google. I like Facebook, or especially Google because I actually pay Google for services. And Google emails me one day and say, Eric Young, we no longer take US dollars. Like right now, I'm paying them in US dollars. I have to convert my RMB or Hong Kong dollars into US dollars. And I pay Google. And then I get whatever services that I pay for. So let's say 2 years down the road, Google come to me and say, Eric, yeah, you have to use your US dollar to buy a Google stablecoin, and then use the Google stablecoin to pay for the services that you want to buy from Google. So what that essentially does, Michael, is that stablecoin, that Google stablecoin, has to buy US Treasury bills, notes, and bonds to back itself up. Therefore, the US Treasury bills, notes, and bonds have found a new customer via Google, but essentially, me as the end user is funding that. Do you see how that works? That's the scheme right there. They want, you know, for lack of a better word, Michael, they want the entire world to be backholders of US debt.
and and people are going to willingly participate in this too, not even realizing what they're walking into.
Absolutely. I pay for it. I'm not going to argue if I'm like, let's say I spend $200 a month on Google and Facebook and X, right? X has Grok and all that. I spent 200 or $300. Am I going to argue with these US tech giants? I'm not. I'm just going to buy whatever token they want me to buy, use that token to pay for the services, and be done with it. So I think that's going to, you ask me what's going to happen with crypto? I think that's going to roll out within the next 2, 3 years.
What about Bitcoin?
That's Bitcoin is, in my opinion, just a use case for the stable coins. Because right now, without the thing that I just talked about, the biggest use case of these stable coins, like the tethers of the world, etc., is stuff like Bitcoin and the cryptos, right? So people they take the stable coins and they use the stable coins to buy these cryptos or Bitcoin to gamble. Essentially, that's what it is, right? So you ask me where Bitcoin will go, it'll have a role in that. Is it going to disappear? Probably not, because it's a very, very, very big use case for these stable coins. Is it going to correct because of US dollar liquidity conditions within the next 12 months? I don't know. Maybe. It's very possible. It's already correcting right now.
Yeah, the whole, and I've had Bitcoin people on here. The conversation, the whole decentralized. I if these governments want to come in and take it, I just find it hard to believe that they can do whatever they want to do here.
Absolutely, Michael. I mean, that decentralized thing is just they dreaming it up. I mean, like I read somewhere 70% of all Bitcoin transactions are done on the major exchanges. So are these people talking about the 20 to 30% of peer-to-peer transactions, which are often done by people who live in the shadows, who are doing things illegally, who are money launderers? I mean, is that what we're talking about here? Because most Bitcoin transactions, like I just said, are done at decentralized exchanges.
Where can people find you, Eric?
Well, Michael, they can find me on X at King Kong 9888.
What are your what are your plans then for the rest of the year in relation to what we just spoke about?
I'm just going to hold on tight to what I own already, Michael. I'm not going to do much because I think, even though there might be vibrations and shakes because of interim US dollar liquidity conditions, I think given the current situation with the BRICS and the US administration, I think I need to have, like I said, the proper instruments to protect myself and my family, and that's going to be the gold, silver, and in the big way, the miners that I own as well.
Well, and the other thing we didn't touch on is and I didn't look today, but I saw yesterday the regional banks here in the United States, the challenges that they've been experiencing. So there's a lot going on right now, Eric.
Yes, Michael, indeed, there's a lot going on.
I appreciate you doing this, and thank you for obviously all the information that you put out. And for people, go ahead, follow Eric, follow him on X, and I read all the comments. I read all the comments on YouTube and Rumble. Please like, subscribe, share, and then consider becoming a paid subscriber on my Substack. I do early access of all my conversations on there. So, Eric, I look forward to our next chat.
Well, thank you, Michael. Really appreciate it.
Mic drop.